Hi there, welcome to SNR Investor, where we trade support and resistance. In this video, I'll teach you how to catch this trend with an easy and effective method for beginners. Following the trend is a very important skill for any investor, which can help you to buy low and sell high. You can use this trend following method to analyze your favorite investments and also to help you to better manage your investment by using the trend following method to decide when to buy and when to sell your investment if it's in a downtrend or an uptrend. Let's catch them trends. To do so, we will be using stage analysis by Stan Weinstein. You can find out more about stage analysis in Stan Weinstein's book, Secrets for Profiting in Bull and Bear Markets. In this video, I'll explain what is stage analysis, how you can get your own chart and tools for stage analysis, and I will demonstrate the use of stage analysis on Apple, S&P 500, Nasdaq 100, and Bitcoin. Last of all, I will share with you some additional juicy tips, so don't miss them. The theory of stage analysis is simple. Just remember, price moves in 4 stages. In stage 1, you will see that price will move up and down, sideways, in a consolidation in stage 1. And stage 2, we will start to see price make some meaningful moves upwards. And this is our stage 2. In stage 3, we'll start to see that price will start to move sideways again in an up and down manner, but it doesn't break any significant high or low, further making a significant trend up or down. And in stage 4, we'll start to see a downtrend whereby price will start to make lower lows in the downtrend, and it will repeat itself again back at stage 1. To identify the stages, we need a 30-week moving average on the weekly price chart. So here I have the 30-week moving average represented in this thick black line and the price in this blue color lines. At stage 1, we will see a 30-week moving average that is relatively flat, and price will be moving across the 30-week moving average in a sideways manner. In stage 2, we will start to see the 30-week moving average starts to curve upwards, and price will start to bounce off the 30-week moving average as price moves higher and higher. In stage 3, we will start to see that the 30-week moving average will start to flatten again, and the price that once bounced off the 30-week moving average during stage 2 will start to cross the 30-week moving average in a sideways manner as in stage 1. In stage 4, we'll start to see the 30-week moving average begin to curve downwards, and the price will start to bounce off the 30-week moving average, but at the underside of the 30-week moving average, different than the stage 2, where price bounced off the upper side of the 30-week moving average, and price will head further downwards. To begin doing your own stage analysis, you will need your own charting tool. I will recommend that you use TradingView. It has a modern design interface and it's easy to use. I will recommend that you set your time frame to the weekly time frame for investing. So the reason why we want to choose weekly time frame as an investor is because we want to have a longer term perspective. So if you will want to do more frequent buy and sell activity, then you will have to look at the daily chart or even the 4-hour chart. But for most investors, the weekly chart will be a good starting point of analysis. You can also analyze on the monthly time frame as well. And for the indicator, for stage analysis, you will need a 30 moving average. So step 1, you will need to go to tradingview.com. So type tradingview.com into your browser. Then at the website, step 2, you will need to click on Superchart. So this is a free to use charting platform. You just need to register an account and log in. Step 3, you need to change your chart time frame to 1 week. Click on the icon here and select 1 week. Step 4, you need to click on the indicators tab over here and add moving average symbol. So to do so, after you click on the indicators tab, this screen will pop up. And here there's a search bar, so type in moving average and you'll see a list of different types of moving average. Choose moving average symbol. Step 5, to adjust your moving average to 30 length. Leftmost corner, you'll see that you have volume and SMA. So SMA is the moving average symbol that you have just added. Click on the settings and in the input field for length, change it to 30 and click OK. Here is a sample of the final chart with the 30-week moving average after you have followed the previous steps. Remember to watch to the end for additional tips on using the stage analysis. Okay, let's start analyzing Apple with stage analysis. So I will start to draw the boxes for different stages. So here you can see possibly the beginning of a stage 1. Here could be the start of stage 2. Then here we possibly have our stage 3. And then possibly a very short stage 4. And now we are in possibly a stage 2 over here with a very minor stage 1. So sometimes you can see that it's quite hard to differentiate between the stages. It might not be as clear as what I've shown in the slides just now. And sometimes the stages can overlap. In this case, you can see that stage 4 and stage 1 can be quite close together because it's not very easily identifiable. So if I were to refine this analysis further, here is our stage 3. Or stage 4 could start from all the way here, although this pullback is a bit too much and it crossed the 30-week moving average, but it seems like we could safely look at this and say that the stage 4 started ever since it broken down the 30-week moving average over here and make a significant down move all the way here, and then we have a very minor stage 1 over here, and then now we are in a potential stage 2, and we are looking at possibly, we were to look closer in this year, since the start of this year we have a very quick stage 1 and then price starts to bounce off the 30-week moving average and we start to see price go into stage 2. And now we might be seeing that price might be moving towards the 30-week moving average, and at this point we want to see what happens when price touches the 30-week moving average. will price actually bounce off, or will it start to consolidate around the 30-week moving average, forming a potential stage 3? And then we might be looking at maybe a very quick stage 4, or maybe another stage, a continuation of stage 2. So if you were to look at the overall bigger picture, Apple has been moving on a uptrend, and you can see over here the stages can come in different magnitude, and it's not like the diagrams that I have shown in earlier. So you can see that stage 1 can be a very small range, stage 2 can be a very huge range, and then your stage 3 can be in a larger range than your stage 1, and then stage 4 can be a very small range compared to stage 2, and then the new stage 1 can have a different size of range. So the sizes, the magnitude of the range can differ between the stages as price behaves as and like it behaves. So when we use stage analysis, we use it as a tool to help us to be able to make sense of what price is doing and how can we possibly take advantage of its behavior. So you can see that even though it's not so clear as what I have shown in the video example of what stage 1, stage 2, stage 3 and stage 4 looks like theoretically, you can see that it resembles what I have shown in some ways, and we can actually use this to help us to make some investment decision. For example, you can look at here in 2019, when price starts to respect the 30-week moving average, we could start to consider buying into Apple, and then we can hold it for its duration until it starts to cut across the 30-week moving average significantly. So you can see here, even in stage 3, you might not be convinced that stage 3 has ended. Then you could have still gotten out at around here in when stage 4 retraces back to the 30-week moving average. And then you could also get back earlier this year into Apple during its stage 1 consolidation, and as it's going into stage 2 over here. So by using stage analysis, it can potentially help us to capture all these large price swings in price action. Okay, now we shall look at the S&P 500 chart. So now I will start to mark out the stages. So we have a stage 1 over here, stage 2 over here, a very quick drop that we can ignore. This is during the COVID panic, so if we ignore that drop and let's assume that the trend continues, we have our stage 2 up all the way to here. And we have a very quick stage 3 as it cuts across the 30-week moving average. Stage 3. Then as price pull back and bounce off the 30-week moving average, that begins stage 4 as the downtrend continues all the way to here. And then we are back to stage 1 as price cut across the 30-week moving average. And lastly, up to today, we are in stage 2. As you can see, the 30-week moving average is also sloping upwards as well. So overall, you can see that the S&P 500 has been moving on an uptrend. If we were to use stage analysis to dollar cost average into S&P 500 or to invest and hold for the long term for S&P 500, here would be a good area to have bought your S&P 500. and ride it up as the 30-week moving average start to slope upwards. And during the COVID one, if you did not panic and sell, it would have just continued on its uptrend. So this COVID panic sell of S&P 500 is an anomaly, and it's just a very unforeseen event that no one could have predicted. So it reacted really fast and to the downside, but it still continued on an uptrend after that. So if you were to be safe as an investor, and as it cuts across the 30-week moving average and close below the 30-week moving average, you could have closed your investment to protect from any further downside. And if you did so, as it returns back up across the 30-week moving average and retrace back to the 30-week moving average over here and bounce off again, you could have considered to reinvest into S&P 500, expecting that it would continue on its stage 2 price movement. Then in 2021, towards the end of 2021, we have the stage 3, and it's a bit difficult to identify stage 3 in its beginning because it could be going on a continuous uptrend, and then when it starts to break down from one of the low, then you could identify the stage 3, and when it starts to cross over the 30-week moving average. In this case, the stage 3 is relatively short because you can see that it quickly transitioned into a stage 4. So here is another example whereby the duration of the stages are not always very extended. Sometimes it could just be a few weeks or maybe just 1 or 2 weeks, and then it hits straight into the next stage. So expecting a prolonged stage 3 every time, or a prolonged stage 1 every time, or a very prolonged stage 2 or prolonged stage 4 is not something that you can rely on. You have to read how price react to the 30-week moving average and make a decision on to whether you want to invest or to take your investment out. So you can see that stage 4 was pretty much most of 2022, and then before 2023 started, we had a stage 1 whereby price started to cross over the 30-week moving average both up and down. And then beginning in 2023, we start to see price move into stage 2, and as the 30-week moving average also start to slope upwards as well. So you can see now we might be expecting some form of interaction with the 30-week moving average as it starts to move upwards and interact with the price. So this is the stage analysis for S&P 500 since 2018 to today. Next, we shall look at QQQ. Okay, this is the investment fund QQQ that tracks the Nasdaq 100. So I will begin by identifying the stages again as well. So we could have a possible stage 1 over here. Okay, so I've drawn out the stages for QQQ. So very similar to S&P 500, you can see that the Nasdaq 100 QQQ fund has also been on a prolonged uptrend in the macro sense, and then in this year it also has made a up move in the stage 2 of its price movement. So similar during COVID panic, there was a sell-off and price moved below 30-week moving average. So if you wanted to protect your portfolio, when there's a weekly candle close under the 30-week moving average, you could have closed your investment and wait for price to move back up over the 30-week moving average before you re-enter into your investment, just to protect your capital from any potential more severe downside. So here is stage 1 in 2018, and then in 2019 all the way to late 2021 there was a prolonged stage 2 with a very huge magnitude, and then a very quick stage 3 over here, and then a very whole year of stage 4 in 2022, and in between 2022 to early 2023 we have a very small and short stage 1 before price moved back into stage 2 again. So you could have taken different advantage of these stages to have dollar cost average into QQQ, or to have invest a lump sum at different during the transition between stage 1 to stage 2 and so forth. Okay, so if we were to zoom in again, same as S&P 500, we would maybe most likely look at price moving towards the 30-week moving average and maybe bounce off and continue stage 2, or it could proceed into stage 3, and that is something that you have to look out for when you analyze your own price action, your own chart using stage analysis, that it could just go into stage 3 and stage 4, and you might not want to invest in QQQ at that point, but it could also continue in a stage 2 move. So you have to see how price interact with the 30-week moving average when they meet each other. Okay, so let's move on to Bitcoin next. Here is the Bitcoin weekly chart. So like the previous examples, I will start by drawing out the stages for you to visualize. So I've marked up the stages for Bitcoin since 2019 December all the way to today. So Bitcoin is a more volatile asset. The price movements are more large than the previous investment assets that I have marked up the charts for their stage analysis. So you can see the big difference in how the stages play out, but using stage analysis as a technical tool to study price action, we can still be able to identify distinct stages whereby Bitcoin transition between the stages. And this could give us opportunity to invest at different price transition between the stage, and to protect our investment in Bitcoin from downturns. So you can see we have a stage 1 price action before it moves into a very huge stage 2, and then it moves into a stage very wild swing of stage 3 price activity before it moves into a very clear stage 4 downtrend. Then the stage 1 to stage 2 transition over here is a bit more difficult to identify because the stage 1 is not as prolonged as the stage 1 during 2020. The stage 1 between 2022 to 2023 is a very quick stage 1 because there's only one cut across the 30-week moving average, making it pretty difficult to identify that as stage 1. But as price stayed above the 30-week moving average, we could also assume and be willing to take the risk that we might be looking at the stage 2 if price go any further. And as the 30-week moving average start to slope upwards, this is a very positive indicator that we are already in stage 2 if the indications are not as clear as over here. So looking at how the 30-week moving average slopes can give us an added indication of the stage that we are in if it's very quick that the transition happened between stage 4 to 1 to 2, as you see over here. So with a very wide, sometimes stage analysis is a bit difficult to use as a tool to help us. In this case, you can see that the swing between the price movements is almost $30,000 difference from the high of stage 2 to the low of stage 3. So it can be pretty difficult to take advantage of this transition in such a volatile asset. So in this case, you will want to hear more about the additional tips for stage analysis towards the end of this video. So as previous, if you are able to identify the stage clearly, then you can take advantage by buying over during the transition between stage 1 to stage 2 and stage 2 to stage 3 and 3 to 4 and 4 to 1 and 1 to 2. At times, you might be uncertain whether your analysis is right or wrong. Then you need to be confident with just going with your technical analysis and proceed according to your idea. When you invest, you want to be more right than wrong, but you will definitely not be 100% right during your investment journey. So you need to be mentally prepared that at times you might interpret the price action wrongly and invest at inappropriate times, and you will make loss that you will have to accept. But as you can see that by using stage analysis in general, we are able to make better investment decision at more appropriate times. You can see that the beginning of stage 4, when price bounces off the 30-week moving average, is quite clear. If you are not very confident to buy as price goes up, you can wait for a few weeks of down candle before you close your investment in Bitcoin, or start to short Bitcoin over here and write down the downtrend all the way to here before the price crosses over the 30-week moving average. So you can see that using some of the distinctive, very clear point when price react according to what the stage analysis is, can get you into the trade at the right time and allow you to capture huge gains that will be able to minimize the losses that you take when your analysis is not correct. So you need to be prepared mentally that stage analysis is not a definite analysis. It definitely does not give you 100% win outcome every time. So you will most likely make incorrect analysis at a certain stage, be it because the price changed between the stages too quickly, or be it that you thought the stage might be continuing longer. So this is very important to be prepared when you use technical analysis to aid you in your investment decision. Additional tip number 1, you can use stage analysis with support and resistance as well. Here is an example of using stage analysis with support and resistance. This is the Apple chart that we have marked out the stages. So you can see that I have denoted some support and resistance on this weekly chart of Apple. So if we were to look at the most recent price action over here, whereby price broke out of stage 1 and moved into stage 2, you can see that price actually broke a significant resistance level before it proceed upwards and break even more resistance on its way up. So this is how you can use resistance to refine your entry level or to provide additional signs that the stage have transitioned into another stage. So you can use the resistance to help you with entry, and at the same time you can use the stage analysis with the 30-week moving average to manage your investment. So after you have entered over here on the break of the resistance or on the close of the weekly candle, as I will recommend, to confirm that it's a confirmed break of the resistance first, then you can set a stop loss or to cut your investment loss if it goes below the 30-week moving average. And as you start to see that the 30-week moving average begins to curve upwards, this is a sign that it has entered stage 2, and you can move your stop loss to protect your investment gains as the 30-week moving average curved upwards. If price did not break this resistance and instead price continue to break the support, it's a very likely sign that we are still continuing a potential stage 4. Using support and resistance together with stage analysis can strengthen the analysis of price action, and this can help you to better make your investment decision on when to invest and at what price to invest in. If you'd like to learn more about support and resistance way to invest, you can watch this video on how you can use dollar cost averaging by time or price with support and resistance, and you can also learn how to draw your own support and resistance to set your own buy and sell boundaries. If you are interested, you can check out the Support and Resistance Investor Essential Tutorials playlist in the description below. Additional tip number 2. Use the 10 moving average for catching faster moves. By combining the 30 moving average and the 10 moving average, you can get clearer signs that the price is trending, or clearer sign that the price is in a consolidation in stage 1 or stage 3. This is the Apple weekly chart with the stages marked out earlier in the video. So I will use this again as an example to demonstrate how the 10 moving average can help you to further strengthen your stage analysis. So I've added a 10 moving average colored in orange, the orange line over in the chart. So let's zoom in and see how can we interpret the 10 moving average with the 30 moving average together on the weekly chart of Apple. So you can see that the start of stage 4 was marked with the crossover between the 10 and the 30 week moving average crossed, and you can see that it begins the downtrend. And if you were to use the orange as an early sign of potential change, it can work sometimes but not all the time. So here is a very short uptrend. You could have bought here, but the 30 week moving average is still on a downtrend. Then after that, 10 moving average continued to follow the 30 week moving average on a downtrending slope. Then you can see over here, when the 10 week moving average, the orange line, crosses the 30 week moving average towards the upside, it begins the stage 2 move. So here is a very good indication whereby if just with the 30 week moving average, it can be a bit hard to definitively determine that it has transitioned into a potential stage 2, but with the added 10 moving average cross of the 30 week moving average, This can give you a higher level of confidence that it could be on a stage 2 move already. So the 10 moving average provides you with a faster indication of changes, and when you couple it with the slower 30-week moving average, this can provide you with a more robust technical analysis of the price action. So over here you can see that when stage 1 is about to end, you can see a very clear early sign that price has crossed over upwards of the 10-week moving average, and this will prepare you to want to look at maybe getting into Apple again. And then when price broke out of the 30-week moving average and retraces back into the 30-week moving average and bounce off the 30-week moving average together with the 10-week moving average cross, this is a very strong indication over here that it is a good time for you to look at buying into Apple. At the time of this analysis, a week ago, the weekly candle has closed below the 10-week moving average. If you are a shorter term trader that doesn't hold for many months or years, this could be an ideal time for you to take some profit when the candle closes over the 10-week moving average, or to lock in some of your profit. And you can also use the 10-week moving average similar to the 30-week moving average for trade management as well, whereby you can lock in your profits underneath by setting a stop loss underneath the moving average itself. So if you are a longer term investor, you want to move your stop loss underneath the 30-week moving average. If you are more shorter term investor, you will want to move your stop loss under the 10-week moving average. So you can use both the 10 and 30-week moving average together to provide you with greater clarity to the technical analysis of the chart, and to provide you with clearer indications of the changes of the stages in stage analysis. Additional tip number 3, use the moving average as an area, not a thin line. So do not treat the 30-week moving average as just a line that price cannot pass or cannot touch. Price can react at the vicinity of the 30-week moving average. It does not need to touch the 30-week moving average to consider that it is a reaction away from the 30-week moving average. So it can also move past the 30-week moving average by a little, and that does not mean that the 30-week moving average has been broken. So you can look at the 30-week moving average as an area whereby price can come towards and react away from. So do not treat this as a thin line for your analysis that you will require that it needs to be touched or broken exactly at the line itself. If you like stage analysis and you want it to be analyzed on a particular asset of your interest, you can type the ticker and the asset name in the comment section below. I will look at it and create a video to analyze the asset by stage analysis. We have reached the end of this video on how to catch trend using stage analysis. If you like the video, please give this video a like and subscribe to receive future updates from SNR Investor. Learn more at SNR Investor. Thank you and goodbye.